Welcome to Shootin' It Straight with Stan. I'm your host, Stan, the Annuity Man, America's annuity agent, licensed in every single beautiful 50 states that we have here in America. God bless America. Love those states. I think I've been to every one so far. Would like to return and dig in and drive around in the RV, if you know what I mean. But I don't want to go to the bathroom in the RV. I'll pull off to like the Hilton and go. That's a whole other story. Today's topic: create your own pension. And yes, I'm talking to you, that person out there that doesn't have a pension, or the person that has a pension and wants more money, or all of you out there that already have a pension and it's called Social Security, the best inflation annuity on the planet. A long time ago, companies would offer the gold watch and pay the pension to their workers. That went away a long, long time ago when the 401k started taking over from, that's a defined contribution plan, from the defined benefit plans. I digress, but that's what happened. It was the 401k is an accumulation vehicle of which at some point in time you have to turn it into an income stream. Now, whether you hate annuities or not, hope you don't, hope you haven't fallen for that nonsense line because you already own one, Social Security. Whether you regardless of what you're thinking about them, it's the only product and the only strategy that will pay for as long as you are breathing. You're transferring the risk to the annuity company to pay as long as you're breathing. If it's joint life, as long as one of you is breathing. It's called longevity risk in the business. But what you're trying to do is create income, that income floor that you can never outlive, that's going to hit your bank account every single month. Now, I always ask people two questions to see if they even need an annuity. Number one is, what do you want the money to contractually do? Number two, when do you want those contractual guarantees to start? That determines what product type, and there's many different types of annuities. Not all do I hate all annuities. I mean, that's like saying I hate all restaurants. To determine which product type is going to provide the highest contractual guarantee. Once again, you buy the contractual guarantee. You don't buy the hypotheticals or the theoreticals, or if you'd have owned it 10 years ago, Mr. Jones, or this upfront bonus nonsense. Okay, you buy it for the number. But there are really four product type strategies out there in the annuity space that provide lifetime income. Let's go over them really quick. The one that you're probably familiar with is called an immediate annuity, single premium immediate annuity. The acronym is SPIA, S-P-I-A, single premium immediate annuity. That's when you want income to start as soon as 30 days from the policy being issued and as far out as a year. No moving parts, no market attachments, no annual fees. Very, very simple transfer of risk. And the big companies play here. We shop all carriers for the highest contractual guarantee. And with all of these products, you can go to my site at The Annuity Man and use our proprietary calculators and run quotes till your heart's content, because we're pulling from all carriers. You'll see the highest contractual guarantees. So single premium immediate annuity is when you need income, that pension type income, to start ASAP or within a year. If you go past a year, if you want to defer for 2 years or 5 years or 7 years, then the product types open up a little bit. All right. The first type is a deferred income annuity. That's like an immediate annuity, no moving parts, no market attachments, no annual fees. It's a transfer risk that you can defer, and the big companies play here, the ones that you see on the TV commercials, the ones that you know by name, those are the ones that play here. We quote them all for the highest contractual guarantee. And remember, with SPIAs and DIAs, you can use them in non-IRA accounts, Roth IRA accounts, or non-IRA accounts, IRA, Roth, or non-IRA. You can use it. The guarantees are the same. It just, the taxation of the income depends on what type of account that you're using. Okay. Obviously, Roth IRA, it's going to be tax-free, the income. If it's a non-IRA account, a portion of that income from an immediate annuity and deferred income annuity are going to be taxable. And then obviously an IRA, you've been deferring, so all of that income is going to be taxable from the IRA. But immediate annuities, deferred income annuities, pretty much the same structure. It just depends on when you turn on the income stream. Okay. The other type is a offshoot of a deferred income annuity. One of the newest types out there that was actually introduced in 2014 by the IRS and the Department of the Treasury is called a Qualified Longevity Annuity Contract. That acronym is QLAC. Once again, you can go to my site. All of these products I've written books on, you can get for free. You can watch videos on them. You can run quotes till your heart's content on them. But a qualified longevity annuity contract is a structure that you can use your qualified money, the reason it's called qualified, traditional IRA type money, to buy an annuity, which shoots down all of the people that say never buy an annuity inside of an IRA. That's garbage, because the IRS and the Treasury actually developed the product for use in your IRAs. And a lot of the 401ks now are starting to offer QLACs. It's a future pension plan that you can defer as far out as age 85. And there's some tax advantages when you go to take RMDs if you own a QLAC. Okay. And then the last type is called an income rider. And it is what it sounds like. It rides on top of a policy, income rider. It's an income benefit that's attached at the time of application, typically to either an indexed or variable annuity. It's the contractual guarantee of that policy. So if you said, hey, Stan, I need income to start in 3 or 7 or 9 or 5 years, we're going to quote deferred income annuities and income riders and QLACs if you're using traditional IRA money and the age makes sense. Okay, so that's how easy it is. And these are commodity quotes. And all 4 of these products, immediate annuities, SPIAs, DIAs, QLACs, and income riders, all 4 are going to pay as long as you're breathing. All 4, if you set up joint life, are going to pay as long as one of you is breathing. All 4 can be set up so that 100% of any unused money is going to go to the beneficiaries, and the evil annuity company never keeps a penny, even though they're on the hook to pay contractually. All 4 are transfer of risk to solve for longevity. All 4 are personal pension plans that we can shop all carriers for the highest contractual guarantee. All 4, no company has the best product within that category. There is no best SPIA or best DIA or best QLAC or best income rider, regardless of what your agent or advisor might tell you. Best means highest contractual guarantee. Best means solving for your specific situation. And of course, we're only going to put companies in front of you that are strong and can back up the claim and pay you for as long as you're breathing. So with 11,000 or more baby boomers hitting age 65 every single day, and more people looking to retire earlier and younger and go live their life. You know, that was kind of the COVID wake-up call for all of us, is go live your life. And because of that, you need to look at how do you create your own personal pension. Now let's quickly talk about inflation, because I'm going to squash that dream like a bug. You can attach increases to these types of products that increase to hopefully combat inflation. But just understand this, the annuity companies don't give that away. Okay, they just severely and drastically lower the initial payment to make up for that increase, whether it's a potential increase or a contractual increase like a cost of living adjustment, COLA, attached to immediate annuity. It sounds good in theory. Mathematically, it typically doesn't hold up. Okay, we can look at that. We can run those for you. If you go to my site at theannuityman.com and schedule a call, you might get me, or you might get someone a lot smarter than me that works for me. But we can run those quotes. But inflation, if you're under the belief that any company out there has a product that addresses inflation, they do not. Nobody knows how to do that. You already own the best inflation annuity on the planet, the best pension inflation annuity on the planet, and that is Social Security. And there are some pensions out there from some of the legacy companies that have increases built in, which is good. But if you're buying a commercial annuity, SPIA, DIA, QLAC, income rider, and you're looking for that, please don't. I mean, we can show it to you, but mathematically, if you run the number, typically it does not make sense. There are a handful of occasions that it does, and we'll tell you when it does and if it does. But don't be that person looking for the perfect product, because guess what? Someone's going to try to sell it to you and it doesn't work. So you need to, if you're thinking about creating your own pension, there's only one product type to do that, and that's the annuity category. And there's 4 ways to do it: single premium immediate annuity, deferred income annuity, qualified longevity annuity contract, and income riders. You can quote all of those at my site at theannuityman.com. I've written owner's manuals on every single one of them that you can read, easy to read, like 50 to 70 pages that I just factually just go into everything, good, bad, limitations, and benefits. So with that being said, create your own pension. Let's go live our lives. Let's have money hitting that account regardless of what the markets and the politicians do. It's called your income floor. Let's put it in place contractually. My name is Stan, the Annuity Man. See you next time.